Welcome once again, everybody, to the live stream that we got going on here. It's our weekend dividend communion that I am so happy to be sharing with you. But first things first, we've got to light the candles. So we'll just, Jesus, careful now, careful. We'll do it down here while we're going live. So again, thank you for joining us. We're going to talk some news. We're going to talk some investing. You're going to see what I bought. If you get the newsletter, you're already well aware of what I have going on there as I set this up, because I need to see myself to know that I'm on. And cheers, everybody. Is that a Christmas mug? It is a Christmas mug in April. Why? Well, our other mugs were dirty, quite honestly. So this is one in the back of the cabinet that wasn't, well, hopefully it wasn't dirty. I didn't blow it out. So I may be drinking a little bit of dust, but hey. Never hurt anybody, right? So happy to see you. I just realized I'm wearing the same shirt that I wore in the last video. It's, no, I do have different shirts around here, but all right. So happy to see you guys. What are you drinking? I'm sipping on some chai black tea from Aldi. Let me know to steal. Yeah, thanks for the birthday wishes, everybody. Pat, and to answer your question, it was a rain check kind of birthday, so had a little bit of a snafu with some car repairs here. We have a serpentine belt on the 2011 Dodge, not Durango, 2011 GMC Acadia. Been wanting to change, so I did some yard work, cut the grass, and then I was like, we'll knock this belt out. Anyway, had to go to 3 different auto parts stores because the belt we bought was wrong. And anyway, kind of, you know what? It didn't even muck up the night because we were going to go into Chicago, my wife and I, have a bit of a her and I night on the town, but we ended up staying home, watched Saving Private Ryan with my teenage daughters. They hadn't seen it yet, so they mostly watched it. So it was a good birthday night. I got to spend with my kids, and they say by the time your children are 18, you've already spent something like 90 or 95% of all the time that you'll ever spend with them. So it was pretty nice. We got to do that. So how you doing? I hope it was a wild week. Markets went down, right? What did you guys buy? Let's start there. Tell me maybe I can make this microphone a little better if I move it closer here. The dulcet tones of my voice. Ooh. Anyway, Pat, Janice and Pat, or yeah, the two of you. Either way, 346 of SCHD, so 500 year-end goal for Pat. Very nice, man. So do you guys still invest in SCHD? No celebration after 39. I said, I actually turned 46. Had to think there for a minute. I turned 46. My wife was looking through something from the 80s, and it was like Robert Smith, the singer from The Cure, a band I enjoy. It was like, can you believe Robert Smith is 65? And I'm like, I can, because he was born 65 years ago. That's kind of how that works. So, yes, I can. Oh, Fast Eddie's buying Tesla. Not a dividend stock. Goodbye, Eddie. We'll see you later. No, it's okay, man. We're just all about investing here, hopefully getting some of the best companies that happen to pay a dividend. But you bought at 172. There are some that feel we could see double digits for Tesla. I don't know. We'll see if that's to be. Yeah. Thank you, Steve. Birthday was yesterday. Again, turned 46. But, it's not a surprise. We have a birthday once a year. And as I like to say, hey, I have managed, and right, like, pat on the back. I've managed to keep my heart beating and my brain functioning mostly well for 46 years now after I exited the womb. So yay me, keeping that heart beating, right? We set lofty goals here, kind of in the vein of, in the words of Charlie Munger, if you want to be happier, just lower your expectations. So there you go. If we all just strive to keep our hearts beating from year to year, that's pretty low expectations, right? You got to do better than that, but I think you guys get my sense of humor by now, and if you don't, to hell with you. All right, let's party hard. Greg I think the party hard days, I mean, I know this is in reference. We were talking, Mr. Greg plays guitar, and he actually met the one and only Andrew WK, the man in white. If you don't know Party Hard, go to the Google machine and type in Andrew WK Party Hard. Pretty good, pretty good. So yeah, we got a good little crowd here now. I think we can look at a little bit of news, and we can look at what this young, fresh 46-year-old dividend investor bought. As you can tell, I'm trying to get to my ConvertKit account where I send the newsletter from, just so I can have my newsletter queued up to just, instead of just telling you, it'll just be easier to throw it on the screen with what we bought this week. I did a lot of buying, actually. I'll save it for you here. We'll queue that up. Oh, Jeremy, nice to see you, man. By the way, Jeremy, Dividend Stockpile, dividendstockpile.com. Check his content out. YouTube channel as well. Fellow YouTuber in the house. We'll be in June. We have a volleyball tournament, kind of the year-end big shebang. We will be in Florida again. I know last year it didn't work out. Maybe if you're around, we can say, hey, what's up? I don't know. Get a tea or something. I don't know if you drink. I mean, I drink beer. Not crazy. I don't have a problem, or I just enjoy beer and whiskey on the weekends. Work hard. It's Daddy's little reward for the end of the week. So, what do you say? Let me get caught up to you guys again. Welcome in once and all, and kind of following my guy Ryan Williams, doing more of a, not really a topic. I'm going to share the Simply Safe Dividend news, and then I'm going to share what I bought this week. And that's kind of it every week. Hanging out, wanting to hear what you're buying, what you guys are doing out there. We can get into stocks. We can get into any thoughts, any investing nuggets, wisdom you want to share. Maybe I have something to share. Just that kind of stuff. Yeah, man. Time is the best. So we were out there today. Little bit of butterflies. I got to confess, my 15-year-old drove for the very first time on the street, and I was in the back seat with my 16-year-old, and my wife was in the front seat with her. And what a helpless feeling when you're in the back seat and you have a 15-year-old driving a car on a street with other cars and people. And it's just like, please God, just make sure you hit the brake and not the gas as we're coming to that stop sign. And it was, I used to be a roller coaster enthusiast when I was young. Had some of those same butterfly feelings, but, good kid. We made it home in one piece. And, for those of you that are parents that may not have experienced that, soon as we got home, my wife was like, whew, I could use a drink. But yeah, it's like high alert. Like, you gotta be, no, but it's, you never know how someone's going to react. And actually, as we were watching Saving Private Ryan, I told the kids, and this is what they taught us in boot camp, is that when you're facing a panic situation, or something isn't going right, or a war situation, you never know how you're going to react until you're in it. Some of the biggest loudmouth badasses end up being the people that fold. And some of the people you thought that were going to be they would crumble under the pressure, they actually fed off it and rose above. So you never know until you're into that one. Ray, thank you very much, man, for that. I appreciate that. Oh, dude, Greg, yeah, UNH, didn't they drop by 15%, and then they had their earnings, and then they shot up 12% or so? Boy, we just don't have stuff down for long. So, Greg, congrats on timing UNH. They should be good for a while, but did you miss anything? No, you did not. We were waiting for you, Kevin. We were just going to sit here patiently waiting for Kevin to get in. And I've been missing your live streams, man. It's just been busy. What's up, Craig? Speaking of Florida, where are you? I forget. Do you want to say? I don't think we've said where. You can text me if we don't, if you don't want to say, but yeah, I'll be in Orlando for the volleyball tournament, and then my wife's now departed grandparents still have a condo that the family kind of shares. Really nice in St. Pete Beach. Yeah, I wanted to say Clearwater, but St. Pete Beach, it's all Tampa to me. Tampa Bay, right? So we'll be down there in June. I wanted to say next month, but let's not. Yeah, dude, you missed this guy lighting that candle from Aldi, I think. All right, anyway, so here we go. We're 10 minutes in. Let's get to some news. Again, share what you've been buying. We'll put a bookmark with Fast Eddie. Wild Turkey 101, I do enjoy. Jameson's is a Diageo product, right? I like Jameson's. Those are probably my two favorites, but there's so many. It's hard to pick just one. But all right, so we will coming at you, right? Like Ian Lopik says, coming at you on the screen right now is the news. Oh no, hold on, let me change this. Sorry, I know the streamception, right? Woo. All right, we'll blow that up a little bit. So where we left off last week, MPW, they finally declared their dividend following the sale of some Utah hospitals. So, but still very safe. They think they're going to cut the dividend once again. We will see it if that happens. J&J, we got to the 100 shares. They had their earnings. They raised their dividend 4.2%. I was kind of hoping it would be a little bit more than that, but we'll take it. It's still outpacing inflation, just barely. But right now, I think it's going to be a good business for years to come. And they're trying to bolt on acquisition and make grow, right? Non-organic growth. That would be the bolt-ons, the Boltons, the Michael Boltons. It's anyway. He was on the Jetsons, right? Michael Bolton. He was the singer, the crooner robot. He was not. BCE, which is one of the ginormous telecoms in Canada, they reaffirmed their dividend safety score. Do you invest in BCE? International Paper, ticker IP, they got a dividend downgrade from 70 safe to 60 borderline safe because they acquired DS Smith. So that gives them exposure to a more fragmented European market. I don't know anything about that. So if you do, share it with us. Travelers Insurance raised their dividend 5%, which is their 20th consecutive increase. They reaffirmed and refreshed their outlook on WP Carey, which I know some of you had been buying WP Carey, so that's looking interesting. Flick, good old Flick, which is First of Long Island, right? They got a dividend downgrade to 50 because, as the headline says there, they're higher for longer fund, which the kids are all calling it the HFL right now. So if you're down with the HFL, then you can tell regional banks like Flick could have problems. So that's going to keep pressure on their dividend coverage. A couple more here. Sonoco. You know what I'm saying, son? Ticker SON. Yeah, I mean, son. Sonoco increased their dividend 2%, small raise, which was their 42nd consecutive year. Interesting one, though. I know I was seeing that name for a minute, and it popped up on a few screeners, and I never dug into them, so let me know if you do. A couple more here. Kinder Morgan, ticker KMI, raised their dividend 1.8%, so oil and gas storage and transportation, KMI, with a nice red lightning bolt. This one, interesting. ABR. I guess, Darth was texting me and there was maybe he was going to come on, but he's big into ABR. So they downgraded ABR to 40 unsafe. And if I could just sum this one up, all that it means is that they're potentially having to use more of their profits to cover delay. Oh, here, I'll just show you. I kind of went through this quick. Yeah, so if you want to pause the video, if you're an ABR investor, some of this may be of interest to you. So we'll just do like that. You can pause the video if you want to read this. But yeah, Arbor Realty, this is from the Wall Street Journal, shows their delinquency rates just going up, up, and up. So the first one's 23. So I wish they would have a better label on that axis on the bottom, what those are. But anyway, you can see their delinquencies are going up, and I'll just get to that next chart. So again, knock yourself out, pause the video if you want to read this information. That's behind the Simply Safe Dividends paywall, but here it is, their payout ratio. up to 96% projected for the next 12 months. That has not happened yet. Why? Well, because people aren't psychic and nobody knows exactly what's going to happen. So moving along, I'm going to get through with this quick. So there you go. That is that. And I think that was the end. The last one, they refreshed their outlook on I think it's LTC, long-term care. I don't know what LTC, 40, unsafe. And I'm going to get caught up with you guys, and then we'll come back and do what I bought for the week, because I want to see what all y'all out there bought. So there we go. Beautiful. All right. So what did you guys buy once again? Cheers. Happy holidays. And we're continuing on with our comments. And Janice. Hey, Janice. You're interested in JEPI. Ooh, the covered call ETFs. Taking those monthly dividends to buy more SCHD. What do you guys feel about that, right? I don't know. It seems like a lot of people may have soured on that, but we could compare JEPI and SCHD real quick for you, Janice. Let's do that because I like you, Janice. So we'll do that for you. I just want to use the dividend channel. So we'll just bear with me real quick. I got our returns calculator here. And I don't know, maybe we'll go back 2 years. I don't remember exactly when. So we'll do SCHD and JEPI. I don't remember the inception date for JEPI. I think it was somewhere around 2021, maybe. Let's try this. Let's try April 21st of 21 and see which one did better. Got that. And we got, oh, that's not going to come up. Share this tab instead. There we go. Look at this guy. He's learning, everybody. So, yeah, that was a good start point. We all 3 years exactly. So, yeah, look at that. Total return for JEPI, right? Probably because of that exposure to the Mag 7, I think, right? Correct me if I'm wrong. JEPI they do buy the underlying, right? Am I wrong on that? But either way, JEPI, you see here this where the arrow is 22.5% total return over 3 years. SCHD 12, call it 13%. And that's with dividends reinvested. So yeah, I don't know, looks interesting, but I don't know. I'd like to know what my friends out there, what do you guys think of that? Hey, what's up, Derek? What's going on, man? You bought the good old Super T-Rex there. Bought Prologis. Nice, you told me about that. J&J, Medtronic, CVS, Comcast, and Starbucks. Good old S-Bucks. I'll take an old pull of the chai black tea for Starbucks. Yeah, they were starting to go down. Didn't they flirt with $84 this week? Nice. So Prologis, that was one I put out in one of my last daily newsletters, was Prologis. Solid business. I've worked at 2 Prologis buildings this week, but their CEO had said that just again, higher for longer is putting pressure and making their tenants, they're more cost focused, more than they used to be. So that's going to affect rents in the future and whatnot. But dude, they dropped their guidance, their forward guidance by 1.3%. And the stock sold off, what, 18% or something? I think it was. Nutty. So, Fast Eddie's teaching the kids in school and church parking lots. Yeah, driving. That's what we did, dude. So, this was the second time we took her. She has her permit. We took her to a high school parking lot because it was open and empty. And my older one, we were throwing the football around for a while, my oldest daughter. But, yeah, so it's... It's a terrifying feeling, but hey, if you're a thrill seeker, just look for a 15-year-old that's learning to drive for the first time, and it's fun, man. It's good. So, Craig, hour north of Miami. Shout out there. We won't be anywhere near there, so unfortunately, we'll just I'll wave at you from the plane. Beautiful. I haven't seen you before, Wintech Corp. And when you don't want to think, you buy SCHD and VOO. So VOO is the S&P 500, and SCHD, as we know, is the U.S. Dividend Equity ETF. You get about 100 companies in there, about 500 companies in VOO. There's going to be some overlap, but yeah, exactly. If you don't want to think about it, you just VOO it. I mean, you don't have to learn any accounting, any financial lingo, nothing like that. You just buy one name and you're betting on America. You're betting that America is going to keep innovating and being one of the leaders. So I like it. Hey, Katie K, what's up? I like that, Katie K. Bought McDonald's, bullish McFlurry heading into the summer. Yeah, I'd love to see a breakdown of what. I told myself I wasn't going to say a lot. We've been better. But when you think and you pause and you don't say that word that we should never say, I think it sounds like you might be more intelligent because you're letting the words formulate in your mind and saying the exact right thing at the exact right time. And probably putting people to sleep too. So anyway, I would like to see the breakdown in McDonald's earnings and financial statements, what McFlurry does. I don't even know. I'm sure they have that data somewhere. They're not going to share it. Who was the business this week that, Netflix, they're no longer sharing certain subscriber data with all of us investors, and people didn't like that. Oh, the JEPIX mutual fund, do that. So do that versus JEPI. All right, we could do that. We will do that, Frank, with JEPIX. We'll see JEPIX, what you got there. JEPI, we'll use that one there, and we'll do JEPI up top. I don't know how long JEPIX has been around, but let me share this tab instead. There's nothing for JEPIX, so I don't know if you'll be able to see this in a second, but yeah, there's nothing for JEPIX on that, so I can't do that one, unfortunately. So, it's a mutual fund. I guess Dividend channel doesn't track mutual funds then. And for all of you that are watching, anytime you see is that just the mutual fund version of JEPI? That's interesting. I didn't even know that. But when you see the big old X on the end of a ticker symbol and it's 4 letters and then the X makes the 5th, that's a mutual fund. Reese, what's up, Reese? Reese was in Terminator. I was going to say T2, but yeah, he was mostly T1. Shout out. What a great movie Terminator was. Scotch. So Reese bought Chevron, Philip Morris, and Tesla. More Tesla buyers. I wonder. That's interesting. It does feel like a little bit of the luster, right, is gone from that. All right, I'm just about caught up. So at this point, we'll go over what I bought, a few moves that I made here after 2 more comments here. So Craig, look at that, man. You got a new picture. Nice. How was oh my God, did I mess it? Guyana? You went to Guyana, right? How was that? And you bought J&J, XLV. I don't remember which. That's not the financials, right? Which ETF that tracks. Amgen, Vici, and AEP. Yeah, Vici, you'll see. I bought some Vici. And then we got Fallen Zap. Oh, what's up, man? You're from this neck of the woods. You're from Illinois too, right? Or you were up here? I hope I don't disclose anything about any of you people that you don't want said. So, yeah, long time no see. Very nice to see you. Okay, what did I got? What did I buy? So let's look at what I bought here. We will hide your comment and share this. You don't need to see that. Why don't I just open, let me just open it. And then you should still be seeing this. So this is just my newsletter here, and we'll go down to, penny for your thoughts. We don't need to get into that unless you want to hear about it, but so the dividends I received this week, $158.08. Leggett and Platt. I know. They say when you're in a hole, you should stop digging. but I'm stubborn. I have severe sunk cost fallacy with this, and I keep deluding myself into believing it's coming. It's going to come back, but we'll see. Anyway, so Leggett and Platt, $46. Realty Income, dividends of $51.40. Main Street Capital, those two are monthly. $36 from Maine. IIPR, Innovative Industrial Properties, we have the 10 shares, $18.20. And then Diageo, again, we were talking whiskey. Those were on 4 shares. We had started that position, and then it just, I don't know, I felt it was a little bit high looking at the chart, and that kind of kills it for me. I know it's stupid. I know this is stupid, but the ADR management fee was 4 cents, so a penny a share. But I don't know. How do you guys feel about ADRs, American Depository Receipts? You know, do you feel like you really own the business? I know it's different than like Alibaba was, where that's a VIE, a variable interest entity, I think VIE, where you can't directly invest in it. So it's almost like you're holding part of in the Bahamas, I think it was, they create like a shell structure for it. It got complicated, and as soon as I read that, I was like, yeah, I'm out on this. I'm out because I can't buy it on the whatever other stock exchanges. But anyway, so there's so far this year, we've received $2,228 in dividends across 3 portfolios, and my kids' custodials are tied into this, so a little bit mixed in there. And then this is what we sold. Sold 11 shares of AbbVie. Don't panic. This was just in the self-directed IRA. We're up about 70%. Haven't bought any shares in years, but I was just looking at it and thinking, yeah, I don't know. I have the 25 shares in the taxable, and I would just rather reallocate this to REITs, where the REITs took another hit down, and I think it's a really good buying opportunity for REITs. And it's going to take some time, especially if higher for longer bleeds into 2025. So eventually the REITs are going to start coming back up. So, and then anyway, so here's what I bought. 5 shares of Toronto Dominion Bank at $57 average. Used some of that money again from the AbbVie shares to buy TD. 9 shares of Agree Realty. 15 shares, this is in the Roth, of Harrow Health. They don't pay a dividend. This is one of my more, I don't know, I guess, I don't know if I want to say riskier, but I'm buying future growth that hasn't happened yet, and it may not happen. 15 shares of Vici, $27.68. 5 shares of SCHG, which is the growth. I still want a little bit of exposure in the Roth, so I'm going to get that up to about 25 shares, and it's been pulling back as all those high flyers are pulling back. And then 2 shares of SCHD at $76. So share with us what you have bought. That was my portfolio activity. And we're going to do, before we get out at the end, I'm going to show you the week ahead. There's some earnings on tap. So I pulled it up on Seeking Alpha, which again, I always have that affiliate link. It's ever present if you ever want to save $20 or 20%. Yeah, Nathan, what's up, Nathan? Tesla earnings is this week, so we will get to that in just a minute. Guyana was great. Oh yeah, XLV, that's the healthcare REIT. Okay, all right. I was wrong. What did I say, banking? Janice, you're right. That's another reason, right? Tesla got crushed was 10% of their workers are laying off. Yeah, ADR is issued by a bank, so you are correct. That small fee, and I know that's silly to say that, and I guess if I had a higher conviction, and this shows it's okay to sometimes we buy stuff, have it for a few months, and then we're like, hey, I don't know, I just wasn't feeling it anymore. And honestly, Diageo's got headwinds of their own, shifting industry, shifting trends. We have to look at trends, right? I was going to show you the book I'm reading, and I just pushed it right onto the floor. So 1 second, pardon me. I wheel my ass over here for you. So I bought it. Compounding Qualities. I gotta block out him and me. There we go. Please focus. The Art of Quality Investing by Compounding Quality. And thank you. So there you go. Anyway, quick, easy read. Very good for beginners. I guess I should have put a link to this book. Maybe I'll add it after the episode's done, but I like it. If you don't know Compounding Quality, they're big on X, but that was good. High tech. We'll look at that. I don't know my count on Vici. Good point. We'll do some portfolio porn in a second here, but I want to finish with yours, Frank. So yeah, the American Depository Receipt. You're essentially a bank. I don't know the custodian for. Look at that! I just got an ad. I don't know the custodian for Diageo, but it's one of the bigger banks. So you're paying them a management fee, and that's exactly what that was. So just know that if you ever see ADR, like Neo is an ADR, same thing. Dex Invictus. What does Invictus mean again? I don't remember. But I do know that this guy is going to get upset and have smoke coming out of his ears if you all say Vici. It's Wiki, right? So that is one thing I will always remember from our good friend Darth Dividend. Cheers. All right, high tech. Let's look. Let's do for Craig and all you do some portfolio porn or whatever you want to call it, and see exactly. I think I do. I should know that. I think I'm over 150 maybe. Unconquered, dude. I love that. So that is what the Invictus brand. Okay, makes sense. I love it. It's bold. And dude, thank you for the wishes. You know, it just comes around. We know it comes around. You may not have heard I said the way I wiki. I think I said it right. You say it better, but what was I gonna say? I don't know. You guys derailed me. This is the beauty of it. You wanted to know if I have 100 shares of Vici. We're gonna find out right now with the magic picture machine. Wasn't that Mr. Rogers? Picture? I think it was Mr. Rogers. Like the picture machine behind me. Okay, what are we doing here? Let's do this. Actually, we'll start here. So they do this every week on Seeking Alpha. Is the week ahead. Kind of a neat little rundown. And there you go. You guys can see this. The Thursday will be the first estimate of GDP growth in Q1. And didn't they say the CPI? No. The personal income and outlays. I don't remember that one is, but yeah, the personal consumption expenditures price index. That one is lagging though, right? But it's the manufacturing data one that I think is the leading. So I think that's the one we should be paying attention to more. Here we go, real quick. And you get this. You get to see some earnings. Monday is, what did I do? Monday is Verizon. Pick out the big ones. Tuesday, we got Visa, Tesla, PepsiCo, TXN, Philip Morris, UPS, Lockheed, some of the big names, Mattel. Wednesday, Meta, IBM, AT&T, Chipotle. That will be interesting. They're doing that 50-for-1 reverse split. General Dynamics. Microsoft on Thursday. Alphabet, Merck, Caterpillar. Some big ones. Comcast, Intel, Altria. Boy, I'm hoping for some big earnings. I want to see them up over 44 because I'm probably going to get out. And then Friday, we've got XOM, AbbVie, and Chevron. Of course, I probably sold too early. AbbVie's probably going to crush it and jump by 10%, but it was only 10 shares. And then this volatility, that's interesting, but any IPOs, nothing jumps out there. So yeah, anyway, that's on Seeking Alpha. And then we'll do Simply Safe Dividends. You wanted to know, good sir. We'll just do the condensed portfolio view. Down to 26 total holdings between the three portfolios. We will, here we go, sort by shares. It's magic. Oh, it's magic. What do we got? Where's Vici? Wiki. Dang it. There we go. Look at that. right here, everybody. Oh, sorry, I didn't mean to do that. 150 shares of good old Vici. So, which is, let's see, but you see, it's 2% of the portfolio. We still got Nexstar way up top at 11.5, Pepsi at 11.3, J&J, we got those 110 total shares. So we have 10 in the Roth at 10.5. So yeah, SCHD, we're up to 157, Realty Income 200, TD 155, but we're still down. So I'm probably going to add more TD maybe tomorrow. I still like it below my cost basis of $62. Aries Capital 405, Maine 150. That's just shot up crazy. Dude, I'm up 27.5% on Maine. I wish I would have bought more when it was at $37, but it just won't come down. I can't believe it's up $10 a share from where I bought it. That's wild. Altria, we've been peeling off shares, and yeah, AT&T, dog, down 34%. AbbVie, we got those 25, so we're still up 92% on AbbVie, and I don't know, a little bit of portfolio pouring there. Then these at the bottom, we haven't been adding much. Starbucks 28, that one should add more. And Leggett and Platt, there you go. So Harrow Incorporated up to 155, no dividend. So if anybody wants to know, oh yeah, SCHD 12. Anyway, so there you go. There are some of the portfolio things for you to see. So yeah, we're at that. John, can we look up Nexstar? I mean, we could. What do you want to know about Nexstar? Dividend safety score? I don't know really much about. I think you might see EFs, right? Unless I'm missing something. Closed end funds. Unless you're Canadian, because when I used to get the hockey cards, it would be different. Like it wasn't National Hockey League; it was like LNH, Ligue Nationale Hockey or something. And it always they messed it up. These crazy Canadians. Yeah, I think they get. Yeah, if you want to take a quick spin at Nexstar, I'll show you. I'll show you what they say about it, but I think they're wrong that they give them a safety score of 60, which you'll see why I think it's a lot of people are worried. Investors are worried about the streaming risk. Man, I think it's just way overblown. I think they're undervalued. Probably should add more, but I also check myself and say, I'm up to 107 shares. So I'm up 4%. But I mean, that dividend growth, they've raised the dividend 25% in 10 years. In each of the last 10 years, it's been at least a 25% dividend increase. So currently paying $6.76 per share per year. And it looks high. It looks like a lot, right? But yeah, and that yield is almost 100% above the 5-year average. So forward PE is 6.3. It's just nobody wants to buy it. But look at the free cash flow payout ratio. It's projected to be 19%. I mean, dude, that's why I say they're a free cash flow per share machine. Yes, they've been a little bit flat, but remember, every 4 years, they get a big influx from all the major elections. That's one of their big bread and butters is the political spending. And then every 2 years, it's not as much, but sales growth negative. So it's, it's down a little bit there, but still buying back shares, that big increase right there. They acquired Tribune Media, which was a huge acquisition for them. Really expanded their sales, as you see that just shot up. I mean, 2016, it was at $1.10. They make the acquisition, then it goes to $2.43 billion. Did I say $1.10? 1.1 billion to 2.43 billion. So that really worked out well. And yeah, it's leveled off a bit, but still, if that's the worst for them to just be flat, I'm okay with it. Return on equity, not as high as it used to be. But they're a free cash flow machine. Perry Sook, really like them. Their COO, Mike Baird, they brought him over from Fox. Liang Gliha, I like her as a CFO. She's not as worried about the debt as I am. Obviously, operating margin and free cash flow margin. 17 cents of every dollar that's coming in revenue is making its way to free cash flow, which is what the dividend is paid out of. Just so strong. But yeah, if there's one bugaboo and one thing that turns people off, it's their net debt. But as you can see, the net debt, they do project it is coming down to the net debt to earnings before the EBITDA. I can tell we're probably getting a little long in the tooth here, but anyway, so again, just one of the reasons why it's one of my top holdings, and I think that they're wrong on this borderline safe because again, the free cash flow payout ratio is just so low. They were at 22%. I mean, just I don't know what else to say, but maybe I'm wrong. I could be wrong. You always have to say, what am I missing? Because I've been asking myself that a lot, saying it looks like such a strong business to me. And I love everything that they're doing. But what am I missing? Like, what am I seeing that the market hasn't? Like, and it starts to mess with your head, you know? So, oh, Charles, thank you for the belated birthday wishes. I think my wife, who can probably hear me, she always says it's my birthday week or month. I don't know. Birthday week, she does. So, hey. Oh my God, Frank, right? From Hawaii? I'm like nervously, Frank? I think your name's Frank. Tell me if it is, man. Correct me. I swear I'll remember it next time. Am I using the T dividends? But what T dividends, Darth? Dude, there's sparse dividends. Not much. Yeah, Ivan, I don't really know much about them. So what, let me know. I guess, you know what? I'll look it up for you. PDO. We'll just see what they say. And so we'll look up BTI. So I'm going to give you there's simply slow down. The brain's like, slow down, man. Just take a chill pill. So what do you want to look at here? BTI. That's what we're doing. So let me hide your comment and then let me share the screen. And we'll do BTI and PDO. Ivan, you asked first, I think. So let's pop on PDO for you there. The PIMCO Dynamic Income Opportunity Fund. So yeah, it is a closed-end fund that deals in junk bonds. Junk bonds don't have to be scary. It just means that there's a higher risk of default than like a Microsoft bond. So they can still do well if you know what you're buying and you're confident that the business will not go out of business. But it doesn't say too much about the objective of it. But anyway, 30, dividend safety score of 30, yield of 12.09. You know, I just see that and it just, I don't know. It feels like yield chasing to me. I guess maybe I don't understand them enough, but I'll hear you. So they give a little bit, just an outlook on high yield bond closed-end funds. There you go. If anybody's watching this, I'll just do it like that. So you can come back and pause the video or whatever and read their opinion because it's going to be more informed than mine, which is why it's a great service, honestly. But yeah, their net asset value per share, you don't like to see it to decline. And they say right there, increasing or stable trend is preferable. Why? Well, this is why. Because it means that their per share that they're giving your money back to you, essentially, is the way I see it. So they're unable to cover the distributions and a cut could happen. Which, did they give it? Yeah, dividend growth. Oh, no cut yet. So I don't know, man. It's, is that monthly? Yeah, and it pays out monthly. But so they give you some stats here. So it's really nice. They cover the CLO or CEFs as well. So there you go. There's some information if you want to pause the video and see what they have to say. And then, Steve, you wanted BTI, right? 45, which I think is what they give to Altria. Altria might be 50. But let me just see their dividend safety score. So there you go. Slow growth, 20% growth in the last 9 years. It's in British pounds. Wow. Yeah, that yield is 35% above the 5-year average. Free cash flow payout ratio, not too bad. 65%. So that's still pretty healthy. And I'm just going to zoom past these because I want to see their debt real quick. Shares outstanding, buying back a little bit. And yeah, their debt's not too bad. But I think it's product risk, right? Don't you guys think it's a little bit of product risk with them? You know, Darth, you might have a point there. I just saw your comment. High tech, I probably will get to 100 shares of Starbucks. I really, really would like to see it in the 70s. And I think if we have a market pullback, maybe this week, if some of the earnings are a little bit weak and shaky, I think we could see them back in the 70s, where I would likely just really start adding heavy and probably just, I haven't really put much money into the taxable account lately because I've been putting, I think 135. I took the, what is it, 6,500 a year we can do in the United States for the Roth. So I just divided that by 12. No, 52. I divided it by 52 weeks. And I think it was like 132, but I don't know what. So 135 will get me there to the year to max it out. But yeah, I will get to Starbucks 100 shares eventually. I do like it. Yeah, man. I'm still waiting for T to jump up past 18. I don't know if it will, but I put it this way: AT&T and Leggett and Platt. I have more confidence in Leggett and Platt, but yeah, they're ones that I probably should have gotten out of a while ago, and I'm just really stubborn, and I understand the opportunity cost that's there. So, I don't know. Yeah, I still own H-Row, Michael. Oh, Michael, you respond. I was like, your name looks familiar. Good evening, S. West. I think you have a typo there, but that's okay. We still love you with your typos. You go on with your bad typos. I don't care. We will accept you, one of us. Yeah, I still own Harrow. I added 15 shares this week of Harrow at like 10.74. I think was the average cost basis. I'm going to get that one up to 200. Maybe sit on it. It's going to be a little while. That's going to require patience. And this is what we talk about. You have to have your own due diligence and your own conviction. You can't borrow the convictions of others. You can try, but there's certain things I look for in their in their earnings, in their financial statements when they report, and things are trending in the right directions with like their VVI, some of the ophthalmologic eye drugs that they're in their system. They're getting J codes. They're going to start getting reimbursed by Medicare. So a lot of the seniors that are having cataract surgery and things, they have numbing drops put in. They're going to be able to get more money. I think things are going to just start picking up. I think. Could be wrong. Could 100% be wrong. But that's, yeah. So I do still own them. And thank you for responding to my newsletter query. Qualified and non-qualified. Yeah, you could. But if it's in a tax advantage account, it's not going to matter, which most of my T still is. You are right. Thank you, Charles, for the correction. It is 7K. Are you sure? That's not the over 50 though, right? I'm not there yet. I can't believe I'm getting there. I swear I can't believe it, but oh boy, as Emperor Palpatine says it. Oh, dude, great point. I forgot. Yeah, the draft, the NFL draft, first round, Thursday night. What a cool night. Okay, good. You guys, so you're right. So it is 7K. I thought for some reason I thought it was 65. So maybe I did the math wrong. So whatever 7 divided by 52 is 7K. That's and yeah, as far as well, the Bears have had their problems with quarterbacks, and the beat goes on. We will see. Nice, 8K for over 50. They jumped that up a lot, huh? Man, I like tea. I really love it. This is not a plug, but this tea was bought at Aldi's. So, how do you guys handle your Roths when you're investing in it? Do you just try to get it in as quick as possible? I used to do that, but oh, DRI. What's that? Darden? Is that Darden Restaurants or Restaurant Brands International? Though that's RBI. Darden. That's Darden. The thing with Darden, if it is DRI, the major percentage of their revenue comes from Olive Garden. I want to say it's almost half of the revenue, right? Is from Olive Garden. which, you know what? I think they show that on Simply Safe. Let's let's throw that on real quick and see if this guy still has a brain that works okay. DRI, zip up to the top. Let's see. Come on. This thing starts lagging after I've been on for a while. So Darden Restaurants, there you go. 3.44% yield. Good dividend growth, although they did cut understandably during the... I give a pass for that, but they didn't tell. I don't know, maybe somebody knows, but they have Olive Garden, Longhorn Steakhouse, Cheddar's, Scratch Kitchen, Yard House, Capital Grill, Seasons 52, Bahama Breeze, Eddie V's, Prime Seafood, and Capital Burger. I am pretty sure, yeah, good dividend growth. They did cut during the pandemic. They get a pass. Looks like they're getting about ready to raise again. And let me see what their free cash flow ratio. So that's what the dividends paid out of. Not bad, 65, a little bit high, but it might be coming down. So, and I'm gonna see if they buy back. Yeah, good free cash flow per share. You want to see that? At least it's been going up. They had that one bugaboo there in 2020. Shares outstanding. They increased a little bit there coming out of the pandemic, but they're buying back. So they had to do what they had to do. Yeah, good margins, man. I've never really dug into them. I only know, debt's a little high though. 75% net debt. But when you see this EBITDA, everybody, when you're watching, learning moment, when you see 3.04 right now, I believe that means it would take 3.04 years of earnings before interest, taxes, depreciation, and amortization, their EBITDA, that would take 3.04 years to pay off all their debt. So, yeah, I think 3.5 they show a lot of, that's kind of like a boilerplate number you like to see under 3.5 times. So that's what that number means right there. All right. Get it in as quick as possible. Interesting, Janice. So I think what scared me off, I did that, and then was it 23 that October of 23 or 22? I can't remember now. October of 22, I think it was, when the market was really down. I did that. I went in and quick, and I was all maxed out and just deployed all the dry powder in the Roth. And then the market started going down and down and down and down. And I remember looking at it in October being like, well, I can't put any more money in. There's nothing I can do here but just sit. And I had to wait for dividends to dribble in so I could just start adding a little bit. But yeah, that's what you do, living off dividends, Charles. Yeah, interesting. Oh, so Janice, where do you have your HSA at? Do you do that through your employer? I'd like to know. And then Darth, you DCA the IRA because you can buy stocks at discounts on Mondays. How is that? What do you mean discount? I'm not getting that. Oh, just because it's bipolar? Yeah, what do you guys mean? What do you mean you can buy a discount? Why am I not following what that means? Someone break it down for this. What did I say? Knuckle dragging cretin or something? Yeah, Yum Brands. That is another good one. So I've told you guys about Yum, right? Where Yum is the one I always confumes. What the hell's confumes? Yum is the one that was Tricon, right? That was the one that was spun off from PepsiCo. Yeah. So KFC, Taco Bell, and Pizza Hut are Yum brands. And they were spun out of PepsiCo in the 97, I think. 97. They were Tricon. They became Yum brands. And they have a lifetime agreement with PepsiCo. Trust me, anytime you go into a KFC, a Taco Bell, or a Pizza Hut, you will only ever see PepsiCo products because that was part of the agreement with them spinning that out. Whoa, I didn't know Red Lobster's in trouble. Is it really? Why? I haven't heard that news. All right, what do you got? Derek, you've been funding the Roths earlier and earlier every year. Got them right away. Yeah, I do that. I guess I spaced it out, so I will max it out like the last week of December. I don't invest in any preferreds. And the reason for that is because, you don't get the dividend growth. So you miss out, right, on dividend growth, but then you also miss out on the capital appreciation, because it's only going to ever have that par value from what I understand. Or maybe I'm thinking of something different. I think that's what it is with the preferreds. But with the preferreds, in the order of debt, you're in line first, right? So the common shareholders in the event of a bankruptcy pretty much get nothing. But I think with preferreds, what am I thinking of? I don't know. I'm thinking of something. Oh, yeah. So there's a reason I don't like preferreds. And it's funny. You don't think about this for a while. You do all your research. And then I was just like, yeah, preferreds aren't for me. And I haven't looked at them in a long time. I haven't really thought about them in a long time, but I think I'm kind of cobbling together like a disjointed thought of why I don't like them. So you're saying, just to answer, you have the HS3. So my employer, I can't get an HSA through them. So I think whatever the reason, the deductible was not low enough, I think, or too high, whatever it was. I know. Riveting, right? So the price could be down on a Monday and then up next Monday. Oh, okay. So I see what you're saying. Yeah, I gotcha. Oof, man, I don't think we have enough time about thoughts for selling covered calls. I dabble. I'm not running wheels. Sometimes I always think I want to, but honestly, I've gotten burned with them. JPM was one that burned me real bad. So I had bought 100 shares of JPM, and my cost basis was, I think it was like $109. And what did I do? Sold a couple covered calls. Shares were exercised or assigned at maybe like 120. I think I had it. So I tried selling cash secured puts, part of a wheel strategy to get in cheaper. Just started going up, and then it just went up to where I didn't have enough cash to sell a cash secured put. And then here we are, a year and a half later, it's at almost like $200 a share. And it's like, okay, with dividends received, if I would have just bought the shares, held them, did nothing, I would have been up like almost 10 grand. But instead I got, whatever, a couple $100 for the covered calls. And it was like, not worth it. I really didn't notice that the markets are down on Mondays. I didn't know that. I'd like to see some data on that. Wait, what? Red Lobster might go bankrupt? Oh no, I just got my mother Christmas gift cards for Frank, thank you so much, ma'am. Yeah, I just hey Darth, don't worry, man. We're about to sign off anyway, but I want to get to this last point yeah, so my mother loves Red Lobster. I got her some gift cards for it. She better get over there and use them. I got to tell her. I'm going to send her a text when we're done with this. I actually missed that news. All right, anyway, Frank, yes. So in the order, right? Bondholders, then preferred, then common. And usually by common, there's not a lot. So yeah, I think the preferreds, right? So that's what it is. It's coming back to me now. Frank, preferreds don't have the order of precedence that the bondholders do in the event of a bankruptcy. So you miss out on that. But then they also don't have the dividend growth, I think, and the share price appreciation of the preferreds. Do I have that kind of right? I think it would. So it's kind of like in the middle, and it's almost like I'd rather either go with the bonds or with the common stock. It's kind of one of those in between things. Oh no, the endless shrimp. Honestly, dude, I haven't been to. You know what's funny, Greg? I know nobody's really going to care about this much, but when you get into your 40s, sometimes things develop, and I guess this can tie into investing, right? That's the magic of this podcast. We'll tie anything, like I always tell Ryan, we'll tie anything into dividend investing. Things change. You always got to be on the lookout because I love oysters. My God, just saying that. makes my mouth water. But it was St. Patrick's Day 3 years ago. I used to take them for lunch at Aldi. I'd get the tins, of oysters, eat the whole thing. But one on St. Patrick's Day, I ate them for lunch, and this guy's throat, I started feeling itchy, like my tongue and my throat and roof of my mouth were all itchy. And yeah, dude, Ryan, we've talked about this, but yeah, I was like, oh, that's weird. What the hell's going on with that? So anyway, fast forward a couple weeks, we're at a get together, and we had, sorry, another ad for a lot of you, I know. So fast forward a couple weeks, we're at a get together and they had shrimp. I love shrimp. Like, man, do I love shrimp. Ate a whole bunch of shrimp. All of a sudden, dude, everything was like super itchy and I could feel like my throat starting to swell. And I was like, well, guess I all of a sudden have an allergy to shellfish. And that's that. I haven't had any shellfish. It's killing me, man. Because I want to swear, dude, I love oysters, but you know what I love more than oysters? Breathing. I sure like being able to breathe. So when I kind of weigh the two, breathing is going to get that. So like investing, things change, situations change, you have to adapt, and you probably should go with the thing that is going to be the most beneficial in the long run, like breathing. That's more beneficial than how much I love oysters. So that Mr. Williams, who, by the way, if you guys don't know, I'm sure most of you follow, he's getting married on Friday. So congratulations, buddy. And I always say, enjoy the day, dude. It's one of the fastest days of my life. And just notice while your wedding's going on, look around at the people, because my wife and I got married in 2005, right? Almost 20 years ago, which is crazy. But we got married in 2005. And in that time, we lose track of how many people have died since then. I know it sounds macabre. It's not. I have a happy thought for this to end it with that. But a lot of people at your wedding will die, but there's going to be a lot of people that were not at your wedding. In particular, both of my daughters, both of my nieces. I have just a lot of people came into our lives that were not at our wedding either. So that is a cool thought. And it's kind of like that cycle of life thing, right? So, I know you can tell I'm like trying to get to, my brain's like, it's good, like keep going, but you got to end it. Like land the plane, man. Land the plane. Stick the landing like the, I don't know, like the gymnasts. But look around, try to enjoy it. The day is going to go by so fast, man. It's going to go by so fast. And like you said, it's tough to get that many people together in one place that means so much to you and your future bride, to your fiance. So again, that's just what I want to say. So that's how we'll end it. We'll end it with Pat saying, NEESHDNO. Hey, thank you 70 people for staying on for that. I appreciate that. And Ryan is going to make a video out of the wedding weekend. So yeah, there you go. Wedding vlog. Do it, man. Do it. We'll be looking forward to it. But honestly, enjoy the day more. We'll all be here, but don't let the day go by trying to think about making a video, unless, you know what? Have somebody film you, because you need to be in the moment enjoying that day, because again, dude, it's going to go by so fast and you don't want to have your mind on making a video, a thing for YouTube, so I don't know, get a friend, maybe somebody that's a little responsible with the camera, to just record bits and snippets here and there. So whatever you do. And yeah. All right, Derek, enjoy the journey. You said it, man. So dude, we're way over time here. We're going to pop off with what? Yeah, that's right, with Pee-wee. I love you guys. I'll see you again next week. Darth might be joining me. He was asking to come on, but something popped up. So might have him on to join us. So again, kid of the 80s. I always end with Pee-wee. I love this music. Hopefully it will also make you think of it's bittersweet. So guys, girls, fellow investors, fellow investors, thank you for joining me on this YouTube live stream for this dividend communion. We'll do it again next week. I love you all. See ya.